In this video, we're going to talk about Vinco Ventures, trading under the ticker symbol BBIG. We're going to cover the price action over the past few days, the company itself, and the recommendations regarding buying, holding, or selling the shares. If you would like to see more stock analysis videos, please like, comment, and subscribe to my channel. But before today's video begins, I'd just like to clarify a few things about the timing when my videos are recorded, uploaded, and how much they react to the latest market updates. So most of my videos are recorded and scheduled the day before and uploaded for the next day. For 5 days out of 7, it's a trading day, so of course by the time the video goes live on my channel, the price would have already evolved from there. If there are significant and very volatile movements during the trading day, obviously they will not appear in the video on that day. But usually, to the extent possible, my analysis will be based on the medium term and not really focused on the intraday movements. The reason why it shouldn't matter that much either way is because most people investing in stocks invest for some kind of reason that takes time to get developed, and that their positions are usually kept for at least a few weeks. With that being said, if there are significant stock price movements that happen afterwards, either they will not affect the overall picture, or if they're significant enough, they will be mentioned in the next video about the stock, with reevaluations of the circumstances as needed. Vinco operates in the consumer products and digital marketing sectors. Its most important asset is a social media platform for video streaming in the Indian market. It's definitely one of the more popular platforms, which is expected to fill in the local demand in one of the largest markets in the world. The company was founded in 2017 and is based in Pennsylvania. It both has a good narrative because of the video platform and because it is in the middle of a short squeeze between those who want to push it lower and those who want to squeeze out the short sellers. The market cap of Vinco Ventures is currently at $413 million, and the enterprise value is at $70 million. The market cap is the price tag financial market is willing to evaluate Vinco Ventures stock at, with consideration to its future potentials and the short-term fundamentals. The enterprise value of the company is the net result of the company's assets once the debts are paid back. Usually the market cap is higher than the enterprise value, but sometimes this may be an exception because the company may be highly leveraged or the company is under a lot of pressures from the market, such as a large short position. The quick ratio of Vinco Ventures is 9.03. The current ratio is 9.13. And the debt over equity is minus 0.21. The average trading volume of Vinco Ventures has been 14.57 million shares, and the daily volumes have been 10.4 million shares, 12.3 million shares, and 14.2 million shares. The one-year beta of Vinco Ventures is 6.1. Its 52-week high is $12.49, and the 52-week low is $1.11. Now, let's also talk about the options market for Vinco Ventures. In terms of volume and open interest, the options market seems to favor the calls option side. Generally speaking, the put options mean that the market expects a downturn, and the calls mean that the market expects the price to move up. Key strike prices where there are a lot of interest are $4, $4.50, and $5. Regarding the price action of Vinco Ventures, I think we need to look at it from two different perspectives. The first one is to look at it from the fundamental perspective. In this case, the Q3 losses were wider than expected, which undoubtedly poured some cold water on the hopes that it'll take off in the short term and will increase the short-term pressure on Vinco. The second aspect is that from a short squeeze perspective, the recent trading volumes have been staggering around 15 million shares a day, which is way lower than the previous daily volume of around 50 millions a day, give or take. What this suggests for the retail traders who are hoping to see the stock to move up is that currently the volume is not enough to support the price Vinco Ventures wants to go because there is simply not enough demand. A lot of people likely saw the stagnating stock price and decided to either wait around to see if the stock will find some support before entering, or simply decided to cash out of the position or to look for other opportunities altogether. I believe that if the daily volume still contains a high volume of short positions or a high proportion of short positions, then it means that the short will continue to be a target for the short sellers and that they need to push it lower still in order to make a profit. It's actually interesting to see that over the past few days, the stock managed to hold its ground and to reduce somewhat the degree of the ongoing downtrend. My suggestion is to make sure that you keep a foot in BBIG, but with the assumption that the stock may go lower in the short term, but that the stock will be able to squeeze out the short sellers in the medium to long term. But be careful. This assumption above is the position that I would recommend you to take if you want to have an exposure in BBIG. It doesn't mean that you necessarily have to have one. My recommendation is to hold up to 1% of BBIG shares now, and to make sure that you buy a significant portion of your allocation now. The profit target would be the surges once the short squeeze is completed. Otherwise, hold it for at least 6 months and see what would come out of it afterwards. Your investment should also take into consideration the market conditions and the surrounding sentiment to determine what kind of asset should be picked, for how much and for how long. First of all, the financial market doesn't reflect the real economy. If the stock market is doing great, it doesn't necessarily mean that companies are hiring people, that salaries and living standards are rising. Sometimes it's the exact opposite that happens, because the stock market is a pool of money where things come in and come out, going to different sectors to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is being used for non-productive purposes like merger and acquisitions, fees to financial sectors, buying back equity, and so on, the less there is for the real economy. Another way to put it is that ever since 2008, the Dow Jones has increased significantly. But people don't necessarily see this growth in tangible ways. This is why we gotta be careful with the assumptions that rising stock price means better outlook for the company. Sometimes it doesn't mean anything other than the fact that the asset is getting more expensive to be bought and that their yields is going down as a result. Additionally, some new phenomenons are now palpable, such as the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullback. Bubbles have always been created on and off over the past few centuries, but nowadays it's quite interesting to see the speed at which an organic bubble can be created back in 2020. Because almost immediately after the major collapse of the financial market back in early 2020, the market decided to pour a massive amount of capital in the EV sector and anything that's related to it. Stock prices went up the sky, and for a moment, it really felt like any EV stock can be a golden goose. Another way to say this is that any SPAC with an EV company in it will become the next Tesla, right? Even if it didn't last that long, this episode definitely allowed the market participants to park a lot of their money in a sector, leaving it with either a lot of profits or at least avoiding incurring large losses because they left their money in the blue chips or the sectors heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, especially in the scenarios of a short squeeze. Companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then also trigger an even bigger increase of stock price as a result. Of course, I'm not saying that this is always rational. I'm not even saying that those companies always have a convincing narrative. So, for example, if you play video games, ask yourself if you personally bought all your games at GameStop, knowing that you can buy the same games just online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price nowadays, for the better or worse. Personally, I think that as long as the volatility is high or gets higher, it'll create more opportunities. The final phenomenon is the anticipation of a recession. Many people have been expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because their debt structure is no longer sustainable or that their business model is bad. But overall, the system was able to hold its ground, especially in the North American market. This is partially because capital around the world often choose to come to the American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that capital can provide a steady return without being affected too much by the central bank policies and inflations, I think that this phenomenon will increase its pace as time passes by, at least for the next couple of years. This is why we will likely see the blue chips continuing their ascension, even if for the growth stocks, things may be a lot more nuanced. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain quite low, because the real economy cannot be improved with just money. As far as we're concerned, this means that the patience would be a great virtue for all of us, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and keep the risk level under check. Speculative positions should play a small part in your overall portfolio. I would say it's better to keep them below 10 to 20% of your total holdings. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.